Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. We've just released our monthly India Market Outlook titled, Have We Turned a Corner? In today's podcast, we discuss two key questions. First, on equity positioning given the recent rally in Indian equities, and second, an update on the Q4 fiscal year 2023 earnings season. Indian equities performance has broadened recently. Indian equities have outperformed its developed market and emerging market peers since March of 2023 as global growth concerns and financial sector worries weigh on global risk sentiments. The MSCI Asia ex-Japan and MSCI China indices are up 2.3% and 1.2% respectively versus the Nifty index gain of 5.6%. The rally has been much stronger for broader markets, with the Nifty small cap and Nifty mid cap indices up 7.8% and 7.3% respectively. For investors, the recent outperformance of Indian equities may appear similar to calendar year 2021 and 2022, resulting in a natural bias to increase equity exposure. Well, in our assessment, the near-term risk-reward is balanced for Indian equities as resilient earnings expectations are counterbalanced by stretched valuation premiums. Further, a challenging global macroeconomic backdrop raises the risk of a downgrade to growth and profitability, especially export-focused sectors. However, in our view, Indian equities remain supported over the medium term given the following. First, India's superior macroeconomic fundamentals and a large domestic economy. Second, receding inflationary pressures and a likely peak in policy rates could drive discount rates and risk premiums lower. And third, strong earnings delivery amid muted equity returns since October of 2021, during which period the Nifty index is down 1%, has improved valuation both absolute and relative to peers. Within equities, we remain overweight large cap equities despite the recent outperformance of broader markets, given the following reasons. First, mid-cap equities still trade at a rich 19% premium to large-cap equities compared to its 10-year average premium of 8%. Second, large-cap equities' earnings outlook remains superior given stable EPS estimates compared to mid-cap and small-cap equities. And third, large-cap companies are better positioned to withstand the current challenging global macroeconomic backdrop and relatively tighter financial conditions. Moving on to the Q4 fiscal year 2023 earnings season. Overall, the fourth quarter earnings season is progressing in line with expectations so far, with over 54% of Nifty companies reporting earnings. 61% have reported earnings which has beaten or met expectations. For the reporting companies so far, the fourth quarter revenue for Nifty companies excluding banks is at 11%, and the earnings growth for the reporting companies excluding one-offs is around 5%, both in line with estimates. Beneath the stable earnings reporting thus far, we still continue to observe earnings divergence. Domestic focused sectors, which include financials, consumers and industrials, continue to report strong revenue and earnings and offset the weakness observed in global cyclicals, which includes commodities and energy. Among sectors, banks posted strong profitability and higher net interest margins given strong disbursements and improving asset quality, resulting in a lower provisioning requirements. Consumer staples reported stable earnings as easing cost pressures helped improve margins and offset muted volume growth amid still sluggish rural demand. Auto sector earnings benefited from strong domestic demand recovery, which offset weaker export sales. On the other hand, IT sector earnings was weak as US banking sector stress and softness in global tech companies impacted earnings performance. Management commentary from large IT firms indicate a weak fiscal 2024 outlook given the likelihood of cuts in discretionary spending. Commodity sectors reported weak earnings impacted by weak domestic and global demand amid lower realization. Strong earnings momentum is a key support for Indian equities. India's earning growth continues to outperform relative to peers with expectations of a fourth consecutive year of double-digit EPS growth, given consensus expectations of a 15% earnings growth for the Nifty index in fiscal year 2024 on the back of expected 12% earnings growth in fiscal year 2023. Further, earnings estimates have broadly stayed stable since the start of 2023, A strong earnings outlook for domestic focused sectors, aided by strong domestic macro fundamentals, is likely to balance the weakness in global cyclicals.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.